Guys, I haven't been streaming, but look, we about to get ready to build this computer, and we gonna be lit. I got my Rode mic. I need to get a mixer. I need to build this first, and then once this is built, we'll get the mixer, and then start plugging everything up. Look, that's Alex's car right there.
Oh yeah?
Yeah. Hey, that boy got. Oh, let me call Alex. I'm gonna call Alex when we get in the office. He's probably here. You're the guy. This is you, and this is the guy she says don't worry about. That's crazy, bro. This is you, and this is the guy she said don't worry about, bro. Hey, worry about him. You got to. I'm gonna call. All right, make a couple phone calls. See what the hell Alex said. What's up, bro? I told you not to do that, dog. I told you not to.
We're dressing down.
No, we said business casual, bro. Polo.
Man.
It's all good. It looks good though, cause you look like the financing guy.
Yeah.
And then I'm the realtor that's out there running around with them. It's hot outside, so I gotta have holes in my jeans, man. It's South Florida, man.
Hey, bro, he's right around the corner, bro.
Hey, he's in the office all day, so he's gotta
I gotta be bundled up, bro. It get cold out here.
I called Alex. He didn't answer.
I was just on the phone with him. Damn, what's this?
This is my computer I'm building.
You building a computer?
Yeah, bro.
It's some Bill Nye type stuff.
Dude, I'm building that. I got a mean-ass motherboard, and he's gonna finish helping me put the rest together. I gotta get a mixer. I got a Rode mic already. I got the arms or the articulate mounts on the screens.
Yeah.
Bro, we going ham this year, bro. And then look at this. You know we in real estate, right? So I had to get this map.
Everywhere.
We selling real estate. Where do you want to buy it, bro? Where do you want to buy real estate?
Trying to go to Africa.
Hey, just drop your finger. We gonna help you finance it, and we gonna work the deal, dog. Drop your finger. Where you want that?
Drop a pen, bro.
Where you want that bit, man? You want that IET? It's gonna be cheap, man. Your dollar gonna go a long way. Dubai? You want a condo in Dubai?
What?
Where you want it, bro? Abu Dhabi. Yeah, I'm building
That's
it.
crazy.
Yeah. Saturday, 8:10 p.m. You see what time it is, man? And we're still in the office, bro. Like we don't stop, man. We work 24/7. Try to make sure stuff gets done, and our clients are taken care of. Because if we slack, then that's a possibility of losing the deal. Alex is my broker. He lives pretty close by. We'll see if he can make a guest appearance. If anything, I'll tell him to meet us downstairs. This is not gonna be a good look, Alex. You don't answer my phone calls, man. I told everybody you always answer me. Damn, bro. That's going on the video. Oh, man. Oh, yeah, let's call Rome, because Rome said he wanted to pull up. How I like it?
Yeah.
Creamer. 2 creamers, 2 packs of sugar. Straight. Damn near an espresso. Bro, come walk into my building, man. Look, this crazy. We got all of this space, man. Come. If you need space for lease for your business, definitely give me a call, send me a DM, send me a message. But yeah, you get all of this when you lease a space or unit for your business, and you can have any types of business. There's all types of businesses here. There's other mortgage brokers, there's other real estate brokers, there's real estate agents, there's nail techs, lash techs, there's a lot of attorneys in here. There's an HOA office in here that runs a lot of communities. And once you have that, you have access to the building 24/7. You got front 2 receptionists as your concierge, waiting area, conference room if you need it. You got the cafeteria, which you can utilize, put your lunch in the fridge, coffee every morning, and then when it gets low, you just tell the ladies up front, hey, there's no coffee, and they'll come and make a fresh batch. Oh. And I don't even know how to make this. O'Shane does this for me. I'm on the way. All right, bro. We're over here. That's my partner, O'Shane. He lives close by. He's gonna come through, guest appearance. He's part of the team as well. Funny story, when I first told him, hey man, we should team up and work together, this jit said to me, I'm not gonna be under you. And I've never let him live that down, because after that, I'd be like, all right, well, do your own thing. After that point, he always calls me for help. And I'm like, bro, I thought you weren't trying to be under me. And I was like, it ain't that you're under me, bro. We're working together. Like, I don't want nobody under me. I don't want nobody under me, nobody. I want you to be side by side with me. Like, nobody under me. All right, bro, we're gonna go get some coffee. Let's see if Joe wants something. Hey, can you check out 617 South L Street? We got deals in the work. How you seeing? We going to Starbucks, bro. You want anything?
No, I should be alright.
You sure you don't want nothing to drink, like a passion fruit drink, one of those drinks?
Nah.
Dog, you ain't Haitian, bro. This guy, he's not Haitian, bro.
Bro, I got a crazy sweet tooth, bro. Trust me. Crazy sweet tooth.
All of my Haitian people, listen, come work with me, because he's not really Haitian, bro. He's faking. So you don't want...
We need more Zoes in the building.
You don't want anything?
No, I'm good. I'm
Okay.
good. Yeah.
All right. Guys, we're about to go downstairs. Hey, y'all about to see a party fucking scene downstairs. I used to know everybody here. I don't know nobody. How you doing? How you, can I get a vanilla chai tea? Oh, vanilla chai tea. Yeah, latte. Latte with almond milk and 2 shots of espresso.
Almond milk, right?
Double shot.
Double shot, not triple?
Not triple, no. I want to go to sleep tonight.
Okay.
Hey, but you're going to like this, bro. If you never had it, vanilla chai tea, latte with almond milk and shot of espresso. Oh, you know what's also good here? Is the dragon fruit with coconut milk. Oh my God, bro. That shit's fire. Vanilla chai tea latte with almond milk. You gotta get almond milk. You gotta get almond milk. And then if you wanna hit it with a shot of espresso to get that oomph, yeah, it's gonna be right. Yeah, we gonna be straight. We about to talk hella shit right now, man. Baby! Yeah, I got the fam that came to visit me. Yeah. I see you hiding behind the car. You're trying to scare me. It's not gonna work. You wanna see my daughter? That white. Look, you can tell she's my daughter because look, she got the black nose, the black paws, the black lips, the black paws, black eyes.
Were you scared?
I was so scared.
You scared us.
Ah.
Very shy.
That's my cameraman. Say what's up to the camera. The mic right here. Say, what's your name? Talk to the camera. Ralph. That's my cameraman, Ralph. What's your name? Tell him your name. What's your name? What's your name? Tell him your name.
Yeah, what's your name?
My name is Amara.
Gorgeous.
So look, we gonna bit rate on the highway. How we gonna do it? We gonna bit rate on the highway, you know? Oh, badass kids, man. Here. Why are you crying? Huh?
I want you.
You want me? You have me, mama. You have me. So Azura's crying because she wants to be with Aunt. Joe, my brother.
My guy. What's going on, my G?
Hey man, listen, man, this my dog. We met when we met.
Bro, I feel like we've met like years ago, but like we met like probably like recently.
Recently, like we
Yeah.
really got acquainted.
Yeah.
We've known each other for a while now.
Yeah,
And then
for
we
sure.
recently got acquainted, but
Yeah.
like I said, my man does mortgages and real estate.
Yup.
What else you do?
That's pretty. I mean, I am a realtor too. You know, I have that license for like investment purposes. You know, so like
Your own personal investments.
for my own personal investments.
Tell the
exactly.
people what that does for you. Just by having your real estate license and for you to like, because you don't dabble in helping you can help other people buy and sell homes.
Yeah.
But you don't typically focus on that. You focus on doing the mortgage, right?
Correct.
But having that, what does that do for you in your own personal investments in buying and selling? What's that do for you?
Yeah, bro. I mean, it does a lot, man. But you know, if I was to narrow it down to like the top advantages or benefits, I guess, if that's the right word to use.
Yeah.
I would say like, of course, you know, when you're representing yourself, you know, that's commission. The same commission that would have been going to another buyer's agent, right, is essentially coming to you. So I get to take that cheese, I get to take that commission and pretty much, you know, put it in towards a deal. So I can use that to buy that by interest rate, right? One of the lenders that we're working with right now, they're allowing what's called, you know, agent paid buy downs. So that, you know, we spoke about the temporary rate buy down not too long ago.
Right.
Usually the seller is the one that has to pay for that.
Right.
Right. But now the agents can actually pay for that.
Oh, okay.
You know, it wasn't like that before. So now, you know, if I am purchasing an investment property or something like that, or I'm purchasing another home, right, I get to basically use my own commission to not just buy down my interest rate, you know, like a 0.5% or something, but buy that junk down like 2%.
Yeah, that's huge.
But 2 points, you know.
Yeah, that's huge.
So yeah, that's huge. That's huge. So that's one of the biggest benefits. But yeah, long story short, you get to, you know, take that commission and basically either add it towards your funds to close, or I can use it and apply it, you know, towards the interest rate.
So essentially, you're getting paid to buy homes.
Literally. Literally.
That's what I like right there. You're getting paid to buy homes, bro. That's great. Yeah, man.
Yeah, bro. You could, and not a lot of people know that, bro. That's why, like, a lot of people, they'll get into the real estate industry. Some of them will, you know, get other licenses and things like that. And it's like, if let's just say they get their real estate license and I don't know, they become an insurance agent, right? They'll disregard real estate. You know, they'll like let their license go like null and void and everything like that, and kind of focus on insurance. You know, and I always tell them, like, if you have a license, bro, like, you fought so hard to get it, you've invested money into getting the license, you should always do everything you can to hold on to it.
Facts. Time, money.
Exactly.
Yeah, that's something that you can't get back, so you might as well try to keep it and then take advantage of it in the future.
Even if you're not helping out consumers, bro, like, one day I'm pretty sure if you don't own a home already, you're going to want to own a home. And if you own a home already, you're going to want to sell a home.
Right.
You know? So,
right.
Hey.
It's huge. That's huge. Damn, that's what's up.
Yeah, man.
So that's what's up, man. So, all right, guys. My name is Charles Lewis. You can follow my Instagram at SFLA Luxury Homes. My personal Instagram will be on there too if you want to, you know, collab or, you know, kick the rocks and stuff like that. But we're gonna go through first-time homebuyers guide that I created. It's thorough. I'll get his opinion on what I created and his thoughts from like a mortgage person's perspective, and you know, maybe he can have some constructive criticism for me and things I can add to it, and you know, help it evolve so we can help our clients and consumers out the best that we can with everything that's going on, right? So this is my ebook, which is free, by the way, that I created. First Time Homebuyers Guide. It's a guide. It's not gonna buy your home. It's just a guide into buying home, all right? So here's the home buying timeline. Step 1, you're gonna assess your finances. Step 2, you're gonna select an agent. Step 3, you're gonna get pre-approved. Step 4, start your home search. Step 5, you're gonna evaluate properties, meaning you're gonna be looking at different properties that you can afford to try to possibly put an offer on. Step 6, you're gonna make an offer on the property that you wanna pursue. Step 7 is a home inspection. I could have squeezed appraisal in there, but that's the you guys mortgage does
pertaining
that.
more to the lending side.
That's pertaining more to the lending side that sends out the appraisal.
Yeah.
So the appraisal is more on the lending side. So that's why I don't have it in there. But the home inspection, I would schedule that, or the consumer can schedule that themselves. Then down the road, the lender will send out the appraisal to get for the house to be appraised, meaning find out what the home is actually worth. And then your last step is that you'll have your closing date, and you'll go to the title company, you'll sign some paperwork, a lot of paperwork actually, and you know, the title and deed will get transferred over to you as the new owner. So yeah, we'll go through this, and I'll kind of ask you some questions on, each step from the mortgage side, and then I'll throw in my input, what I'll be doing on the realtor side, all coming together to help you or the client buy a home at the end of the day.
Yep.
Yeah.
Yeah, and I think one thing, that's cool to mention too is like, a lot of people when they're buying real estate, they think of the realtor. Of course, they're gonna think of the lender because those are like the two people that they're in contact and communication with the most.
Right.
Especially the realtor.
Yeah.
But I think they'll get a chance to even see through this. Like during the real estate process, bro, there are so many people involved.
Oh, man.
You got an appraiser, inspectors, you got the title company, and the list goes on, bro.
And then the title company got like 5 people within their network moving around, bro.
So many people.
I'll get phone calls and emails from random people in the title company. I'm like, who are you?
Who are you?
If I haven't worked with that title company and I don't know their process, I'll get some random person to call me or text me or email me. And then obviously you have the main person, which is usually the attorney in the title company, right?
Yeah, yep.
The main person in the title company is usually the attorney who's like overseeing everything because an attorney must be involved with the title work, correct?
Yep.
And we also have a title company here in-house, so if you are selling a home in Palm Beach and you're wanting a title company, Angelina does a great job. I'll make sure to leave her contact info in the description. Make sure you tell her Joe and Charles sent you. She'll give you a small discount, maybe?
Yeah, she'll take care of it.
She'll take care of you for sure.
Yeah, for sure.
All right, so step one with what we want our customers and clients to do is kind of like assess their finances when they're about to buy a home, right? Stop all the spending. Stop using your credit cards.
Yes.
What else?
Those are the two biggest ones, bro.
Those are the two biggest ones.
Yeah, keep up with your income, right? Because a lot of the times, you would think that you wouldn't have to tell people this sometimes, but they have plans on taking out a mortgage or financing something, and then they just start cutting back on hours at work, and it's like we're using your income to qualify you.
You would think you want to work more.
Yeah, exactly. Hey, put in double, triple, quadruple overtime,
Yeah, for the next 30, 45 days, work as much as possible.
Literally.
Live there if you have to.
What? Pick up extra shifts.
Yeah.
Do what you got to do, to show more income.
So people, you hear my boy, if you're buying a home and you're in the process of getting a mortgage, you need to start working some more.
Yeah.
Stop spending, work more. And that kind of goes hand in hand because if you're working more, you naturally just stop spending because you're always at work.
Exactly. Right. Yep.
So work more and everything else will fall in place.
Literally. That's a good point. That's really good.
Makes sense.
That's really good.
So assessing your financing, the first thing you want to do is calculate your income, determine your total household income, including salaries, wages, bonuses, and any other sources of income. So as the mortgage originator, what do you ask from the client when you're they're trying to apply for a mortgage? What do you ask from them as far as to see their income?
So when it comes to it depends on the type of borrower that we're working with, but for the most part, standard documents, right? We want to see W-2s if you're a wage earner. If you're self-employed or if you own a business, we definitely want to see your tax returns, 1099s, K-1s, things of that nature. But when it comes to income, that's pretty much it. And income, can come from a lot of different sources, right? I mean, let's just say you have a property already and you're renting that property out. We'll eventually need to see your, tax returns, as I just mentioned, for that also. We'll definitely want to, if you have like a lease agreement or anything like that for a home that you're renting out, we'll want to see things like that. But I'd say standard, we're talking about first-time homebuyers here. Pay stubs, W-2s, 1099s, tax returns, that's like the generic list of documents that we'll usually send out and request.
Okay.
Yeah.
And then, so if you're a W-2 employee, you don't need to see their taxes.
No, I mean, we can use the tax returns, but so the underwriters have this rule, right, where they say once they see something, they can't unsee it.
Yeah.
So the tax returns, right, there's just so much information on there. So not to say that the tax returns is going to be detrimental to a loan, but we just, if the W-2 is what's needed, we just rather give them the W-2.
Right.
Yeah,
right.
we don't want to give more than we're required to give.
Right. Makes sense.
Yep.
Makes sense. So if you're a W-2 employee, meaning at the end of the year, you receive a W-2 to file your taxes. When applying for the mortgage, all the lender wants is your last 2 years W-2.
Correct.
Do not give anything else.
Correct. Yeah, dude. Like, there's times where I'll send out a checklist and I'll be like, "Yo, send me your W-2s for 23 and 24, right? The last 2 years," and I'll reach back out. I'm like, "Hey, I need the W-2s for 23 and 24." They're like, "We sent it already." I'm like, "I don't have it." I'm like, "Send me your W-2s for 23 and 24." They're like, "We sent it already." The whole time they're thinking it's a tax return. So sometimes I actually have to kind of like break it down and be like, so your W-2 is the form that your employer gives you at the end of the year.
Right.
And you take that form and you go to your tax preparer to file your taxes. But they mix the two up. And then like sometimes I kind of play along. I know what they're talking about.
Yeah.
But I kind of play along to see how far I can go with it.
Right. Yeah, dude. I think we literally hold a lot of our clients' hand through the whole process, which I'm more than happy to do. Like, I understand, like, we do this as a business, so it's transactional for us. So, and we do it all the time.
Right.
And this is your first time, so you're completely agreeing to the process. So we don't mind holding hands through the whole process. But yeah, we do have to hold hands.
Yeah.
Like, literally show you.
Yeah.
What we're asking for. I'm trying not to curse. All right.
Let it out, Charles.
Yeah, I'm gonna let it out. All right. And then step 2 from assessing your income is evaluating your expenses. Now, when you pull credit, right? What are you? What's counted against your income? Like, is it? So your debt to income ratio is what is your revolving debt that you pay on every month is counted towards your income. What are those things?
Yeah, so the only debt we look at is basically debts that's being reported on your credit report, right? So we're looking at credit card debts, installment loans like auto loans, student loans. We're looking at things like I mentioned credit cards already, but those are like the two main things that we look out for. Yeah, revolving, credit cards and things like that, auto loans, student loans, just your day-to-day installment loans. Like you could have went to, I don't know, Best Buy and financed a piece of equipment or something like that.
Right.
So those are the things that we count against you.
Right. They count against you.
They count against you. Yeah, we add that towards your DTI.
Okay.
Yeah.
What's not counted against you? Because a lot of people get confused on like things that aren't helping them that they pay every month, but they don't know that it doesn't count against you, even though you're making those payments every month. What are those few of those things?
So a few of those things are like, for example, utility bills, right? Like if you, we're in Florida here, right? So your FPL bill, that's not gonna get counted against you.
Right.
Your phone bill, that won't get counted against you, right? Your cable bill, that won't get counted against you.
Okay.
Right, so I think speaking along the lines of evaluating your expenses, that's why we always tell our clients, like, just because we qualify you as a lender for a certain purchase price, it doesn't mean that you can afford the monthly payment that's coming with that purchase price.
Right.
Right. Because we're only looking at what's on your what's being reported on your credit report.
On the credit report.
Right.
Correct.
But you may have other bills that we probably don't even know about. So it's super important. I think the rule of thumb is about 35%. That's kind of where 30 to 35% is essentially where you want to keep your total DTI. But as a lender, the rule of thumb for us is 50%.
Okay, so you just said something that even a lot of realtors don't understand. Keeping your debt to income under 35%, you said?
Yeah, 35%. I believe, I'll fact check that, but I believe it's 35%. 35% is a rule of thumb. Like most financial advisors, they'll probably advise and say, hey, when you're buying a home, you want your total debt to income. Like this is your credit cards, installment loans, including the mortgage you're taking out. All of that, they want it to be, they advise that it's around 35%.
So 35% of your income.
Correct, yeah. So basically, your total combined monthly debt shouldn't be no more than 35% of your total combined monthly income. Correct.
Guys, you gotta have to rewind that and listen to that again so you have a complete understanding about that, because that is very important. That knocks a lot of people out of being qualified to buying the home that they want and having to settle for a home that they probably didn't want as much, but they're okay with. But if you want to be qualified for the home that you want, you have to make sure you keep your revolving debt as low as possible. pay it all off, and then look to try to get a mortgage.
Yeah,
but
the less that you have, the better.
the less you have is better.
The less you have, the better. The less that you have, the more you'll qualify for.
Right.
The more of a monthly payment you'll be able to afford. And at the same time too, like you're buying a house, this is gonna be like the biggest and largest probably monthly expense that you have to pay.
Right.
So yeah, before you buy a home or even during the home buying process, you definitely want to try to eliminate as much debt as possible for
As
sure.
much debt and as much spending as possible.
Yeah.
Awesome.
But debt doesn't mean that you can't qualify for a home.
No.
A lot of people, they think like, oh man, I got like a car loan and I'm paying, $200 a month. I can't buy a house. No.
Right.
It's like if you have debt, you can still qualify for a home.
Right.
But of course, the less debt you have, the more you qualify
The
for.
more you qualify. So if you have some debt, you'll just qualify for a little bit less of a home.
Exactly, correct.
Yeah.
Yep.
All right, awesome, man. And then step 3 is estimate your down payment. Now, this is your lane right here because this pertains to the financing. Yeah, go ahead and take the wheel on this one and tell us a little bit about down payment and the rule of putting 20% down. If you're not, then just put the minimum requirement for
Right.
the loan product.
Correct.
Yeah, go ahead.
Yeah, so a lot of people till this day still think that if they're buying a house, you got to put 20% down.
And that's not true.
That's not true. Yeah, that's not true. There's a lot of people out here buying a home with, putting down as little as 3%,
Yep.
3.5%.
Yep.
To our military men and women, they're putting, 0.
Yep.
So a lot of people don't know that type of stuff. But yeah, so when it comes to down payment, of course, the minimum down payment's gonna vary, right? Depending on the type of loan that we're doing.
Right.
So of course, with an FHA loan, right, a lot of first-time home buyers, that's the loan they go for.
Yeah.
Just because of like the advantages and the benefits that come with that loan program. So with FHA, we're looking at a minimum down payment of 3.5%, right? And then with conventional,
Wait, hold on.
Yeah.
So you said you're moving fast, bro.
bro, you gotta tell me this. Bro,
I mean-
I be my mind, bro.
Guys, you got so much game, bro.
Bruh.
You gotta slow him down to get it out. All right, so
My mind just be like,
let's go.
yeah.
So you said FHA, you can put down 3.5%, right?
Correct.
So if I'm buying a house for 650, I don't have my calculator with me. If I'm buying a house for 650,000, and I qualify for FHA, all I gotta put down is 3.5%.
3.5%, correct.
What's that amount?
Bruh, that boy trying to throw me under the bus.
No, wait, hey, I said we ain't got calculators. We gonna get the calculators out.
So if you buy a $650,000 property and you're putting 3.5% down, you're looking at $22,750. That's your total down payment.
So if you want to buy, well, you got to qualify for $650,000 home. That means your income got to show that you can sustain a monthly mortgage for a $650,000 home.
Correct.
But if you qualify for it, you can put down for an FHA loan. You can put down 3.5% down payment, right? $22,750,000. $22,750.
Correct.
Down payment. What's the highest amount you can go for an FHA loan?
God, that's a great question. I was gonna get into that too. So loans have what's known as conforming loan limits, right? For FHA, I believe it just changed this year. They usually change it like once a year or something like that.
Right.
I don't have that number in my mind, but I do believe it's around 600,000, maybe 500.
I think it's a little higher than that.
Yeah, I think it's probably. I think it's pushed it to the 700,000.
Yeah, I was gonna say like 800K.
Yeah.
You guys might have to fact check us on us on this, but I believe FHA will allow you to go up to like 800,000, and to be exact, I want to say like 781 and 400 to be exact. I don't know. I'm just throwing it out there, but yeah, you can get qualified for an FHA loan up to 700 to 800,000. So with that, all you need is 3.5% down, then plus your closing costs. But just know your monthly mortgage on that is going to be pretty high. Yeah. And if you're okay with paying that, dude, put down 3.5%.
Yeah. I always say like if you may have 20% in the bank to put 20% down, but if you don't have to put 20% down, because some people, they know they don't have to put 20% down, but they'll put that much down because they're trying to, lower their monthly payment. They're probably trying to, well, I mean, with FHA, it's different. So I was going to talk about PMI, but I won't go into that. But you know, some people like they do it to, I guess, just better their monthly payment and just their situation.
Right.
But I always say, yeah, if you can put 3.5% down and hold on to another, like, I don't know, 17%, save that money,
Right.
you're better off doing that, because I'm sure we'll talk about this later on too, but you don't just have down payment, but you got your closing costs.
Right.
And especially if you're buying a home for the first time, right? I talk about this all the time, but bro, things happen, bro. You know, you definitely want to make sure you have money set aside, you know, like an emergency account,
Yeah.
you know, that way.
We're gonna get into that.
Yeah. See, bro, you gotta tell me to, like, bro, my mind, I just be, I be jumping from one thing to another, man.
Stay on task, man.
Hey, bro.
Hey, guys, I'm telling you, my ebook is very thorough and detailed because I've been through this process so many times with my client. I've been through this process with myself 10 years ago when I bought my home. And I'm like, yo, let me put something together for people to ask the same questions over and over again. And now I have it for everybody. I always hear a lot of rumors that says you have to put 20% down. Do you have to?
Short answer, no.
You don't have to.
You do not have to.
Okay.
For some loans, maybe,
Yeah.
but especially if you're buying a home for the first time, like you're buying a primary residence, absolutely not.
Okay, and just so you know, we're only talking about first-time home buyers, maybe somebody who bought a home and selling it. So the two main products is FHA and conventional.
Correct.
Now, if you're doing other things and investments and non-primary property, there's all different types of other loans for you. We can get into that in another video, but for this video, we're gonna focus on people who are buying homes for the first time. Maybe they own a home and trying to buy another one, or selling the home that they own to buy another home, using the equity in that home that they bought for the first time to put it towards the second one. There's real estate for you. So now, so you don't have to put 20% down.
You do not have to put 20% down. Nope.
Now, do you think it's wise if you're, so let's say FHA only requires 3.5% down. Now, what if somebody says to you, hey, I want to put 10% down instead? What do you say to that?
I would say there's nothing wrong with that, right? I would probably just ask that person, like, why do you want to put 10% down? If you're putting 10% down because it just sounds better,
Yeah.
I don't think that's a good idea. But if you tell me, like, hey, look, I want to put 10% down because, right, I can, maybe I could save 100 or so on my monthly payment. Then yeah, for sure, I think that's a good idea.
And that's what I was going to get at, because unless you're going to put 20% down, the change in your monthly mortgage is very, what?
Very little.
Very little, right?
Very little. Yeah, that's
Yeah.
a good point. Very little.
So if the loan requires you to only put down 3.5%, put down 3.5%.
Right.
Because anything other than 20% or more
Right.
is not going to do much.
Exactly.
Right.
Yep. Yeah. If you're on a conventional loan, right? Some people, they want to put 20% down so they can get rid of PMI.
Right.
Right. But to me, I mean, that's just me. I look at PMI, and PMI is like very insignificant, And let's just say, because with FHA, PMI, is on the loan for the life of the loan. So whether you put 20% down.
Oh, really? I didn't
Yeah.
even know that.
Yeah, it's on the loan for the life of the loan.
And even after you have 20% equity in the home?
Correct. Yep. It's on for the life of the loan.
Oh, wow.
Yeah, with conventional, of course, once you hit, once you have at least 20% equity in the property, then you can go ahead and reach out and tell them to remove the PMI.
It should fall off, but if it don't, you can give them a
You
call.
can always give them a call.
And it'll drop.
Exactly.
Cool, man.
Yep.
All right.
But yeah, I think 100%. If the minimum down payment requirement is, let's just say 3.5% or 5%, you should definitely put that down. Like putting 20% down, me personally, I'd rather take that money and then pretty much save it and
And this is pretty much, this next step is going off exactly what you're talking about. So you said there could be additional costs, things can happen. So step 4 in evaluating your finances is there are other costs associated with buying a home, including closing costs, property taxes, homeowners insurance, maintenance, and potential HOA, homeowners association. Those expenses all factor into you buying your home and DTI.
Right.
Correct?
Correct. Yep.
Now, you said closing costs. What's closing costs?
So the way I break down closing costs is it's basically all of the fees that are tied to a real estate transaction. Short answer.
Okay.
Yeah.
So taxes,
Title fees. Yup.
transfer deeds.
Correct. Appraisal.
Appraisals,
Right?
yep.
That's another fee that you have to pay.
All right.
Underwriting fees. Yeah, things like that. But all of the fees that's tied to a real estate transaction.
And what is the typical percentage? I know I use a rule of thumb with the percentage I use for closing costs. What's yours?
I go with 4.
4%?
Yeah. I know. What's your rule of thumb? Probably 3? 2, 3?
1.5.
Oh, really? Oh, wow. You got to up that up, my boy.
Things has changed though. Things has changed. The tariffs and all that.
Yeah,
So-
I usually go with 4%, and I'm usually right on, like with 4%.
So in addition to the 3.5%, your rule of thumb is 4%, another 4% on the total transaction cost.
No, that's closing 4% just closing costs. So for example, if someone calls me, right? Let's just say I'm out in front of my computer.
All right, go ahead, finish.
Yes, if I'm out in front of my computer and they're like, hey, look, I see a house that's like, I don't know, $500,000. I give me an idea of like what's gonna be my total out-of-pocket expense for this property, down payment and closing costs.
What's the total?
The total, so let's just say it's an FHA loan, right? Simple. We're going 3.5% down payment. I'll do the math on that, and then I'll go 4% for the total closing costs,
Total, including the 3.5%?
including the 3.5%.
Oh yeah. So we're about right.
Okay.
Yeah. So total is So I meant total, just closing costs. Total closing costs, 1.5% plus down
no.
payment. That's what I meant. So
Total closing cost is 4%.
so I use 5%.
Oh, gotcha. Okay.
I use 5%
For closing costs?
total.
Total, okay.
Down payment
So
and closing costs.
3.5% for down payment and the remainder will be
1.5.
closing costs.
Yeah, 1.5 to
Gotcha.
2% for
Okay.
yeah.
Okay,
So we're on
okay.
the same page. We kind of just worded it a little
Yeah.
different. and whatnot.
I agree. I agree. Yeah.
So on top of your 3.5% down for the real estate, you have your closing costs, which our rule of thumb is about 1 to 1.5%. Yeah. Yours is actually lower than mine. You said 4%, so 0.5% towards.
Wait, hold on. I think we're mixing it up. So, all right. So we have our down payment 3.5%. Closing costs would be an additional 4%.
Oh, so a total of 7.5%?
A total of 7.5%. That's what I go off of.
Ah.
Yeah. And usually the closing costs might be a little lower. Like usually, like if it's not a new construction property, the closing costs will be like about 3%. You know,
Right.
closing costs.
It varies.
It varies. Yeah.
From property to property.
Correct. But
Yeah.
I always tell my clients, right? I don't like to give people surprises, so I rather tell you that your total closing cost is going to be 4%. I want you to be prepared for that. And usually it's kind of around there. Usually, like I'll never, for example, when I'm giving out, quotes and things like that, I'll never say like, hey, your total cash to close is going to be X.
Right.
I always give them a range. Like
Right.
it's going to range between this and it's going to range between that because I know what your down payment's going to be,
Right.
but your closing costs,
Depends on taxes,
a lot of different
insurance,
things. Right.
all of that
The
stuff.
title company.
The title company's fees.
Correct,
Yeah.
correct.
So yeah, we're about the same. And legally, you have to overquote.
Yeah. as a
Legally, you
lender.
have to. As a
Yeah.
lender, you legally have to.
Right.
I learned that when I was doing my mortgage course.
We're learning.
Yeah, you have to we have to overquote because it's always going to fall under. Because if we underquote and it's actually higher, then they can be held responsible for
Right.
some legal actions.
Correct. Yep.
Right.
Yep. Yeah. And it's always good to do that too. If I'm buying a home, right, I rather, let's just say I had no idea about the real estate industry. I would rather my lender or realtor to tell me like, hey, look, your total cash to close is going to be $5,000 higher, right, than what it's actually going to be in the beginning,
Right.
as opposed to telling me it's going to be $5,000 lower than what it actually is, and then later on it's actually higher.
Right. Yeah.
So
coming up with an extra $5,000 that
yeah,
you didn't think you needed.
Exactly.
Yeah, that sucks.
Yeah.
Yeah. So I would be way more happier to hear like, hey man, it's actually $5,000 less to close on your home. Are you ready?
Right.
Like shit. Yeah. Right. Where do I send the money? All right, man. And then step 5.
I hope I worded that right, but
No, it sounds good. They're gonna be able to understand this because look, guys, we're trying to season this thing so everybody can understand us. We're not trying to be robots. We're gonna be human on this, and we want you to know what we're talking about, and I work closely with a lot of clients. And the reason why I'm talking to you like this is because I want to kind of act more of a client and get a breakdown.
You got some good questions.
So that they know. Then these are the same questions I get every day.
Correct.
So I hear it every day. So that's why I'm able to kind of ask it.
Yeah.
Then you want to check your credit scores. Now, this is your part because you pull the credit to qualify them because you're the one that's essentially giving them giving the pre-approval.
Correct.
To qualify for an FHA loan or FHA mortgage, where do I need to be as far as credit?
So as far as credit, we could go as low as 500, but we'll just once again keep it simple. 580, right? 580 is the like the rule of thumb. Like a lot of lenders, they'll say, hey, 580 is the lowest we're gonna go down to. Yeah.
So go back on that 500 because I actually know about that.
Yeah.
Real quick, 500. If you have a 500 credit score, what do they need to come to the table with to get qualified under the 580?
Right. So if you have a 500, you're gonna have to put anywhere from 579 to 500. You're looking at about 10%.
10% down.
Yeah. And then anywhere between 580 and 599, right? Before you hit that 600 threshold, you're looking at 5%.
Okay.
Yeah.
Cool. So, real quick, if you're gonna be buying a home with a credit score of 579 and lower to 500, because they won't go lower than 500.
Nah. I mean, you'll probably have some lenders, like portfolio lenders or whatever, who's willing to do that. If we call them compensating factors, like let's just say your credit's bad, but your income's phenomenal. You got amazing DTI. It's all about risk. So maybe you'll come across a lender who's willing to
take that risk.
Yeah.
Anything's possible, man.
Hey, the best thing you can do, bro, is just sit down with the lender, talk to them, try to get pre-approved, and you'll be surprised.
Yeah, but the lower your credit score, man, the more easier it is for your rates to be higher. You're gonna put down more of a down payment because you're more of a risk to the lender because it doesn't look too good,
right,
as far as credit.
Right.
But 580 or higher, you only need the 3.5%, right?
580 or higher, 5%.
5%?
So 580 to 599, 5%. And then once you're at that 600 all the way up, 3.5%. You
can go as low as 3.5%.
Yeah, I always thought it was 3.5% at that 580 to 599, but it's actually 5%.
Oh shoot.
Yeah,
See?
I mean that could just be with because I'm a broker, so that could be just with one of the top lenders that I use.
Right.
But other lenders, they may have what's called overlays where they have different guidelines.
Right. So guys, we're brokers, so we work with multiple lenders. I work with multiple agents of their offices. So like we broker deals, we're not direct, so to speak.
Correct. Yeah.
We're not direct, so we're transactional. All right, and then so if I have 3 reporting credit scores, Equifax, TransUnion, and Experian, right? My credit score is a 600, 601, and a 602. Which score do you go with?
The 601.
601.
Yeah.
Why is that?
So we don't go with the score that's the highest. We don't go with the score with the lowest. We go with your median FICO score, right? And I think that's just, I don't really know the reason behind that, but I would imagine that's just a way of mitigating risk, right?
Yeah.
It's like, hey, we don't want to go with the highest score, right? We also don't want to try you and go with the lowest score,
right?
So we'll just go with the one in the middle.
Yeah, I like that answer.
Yeah.
Could be right.
Yeah,
I mean, they're only human too, guys. They're not robots. They're not robots. And then once everything checks out, then you would hand them the pre-approval, right? Based on their income, they'll have a purchase amount that they can purchase for, and then with that, I come into the picture.
Yep.
I take you out shopping, send you homes. I tell you to send me screenshots or tell me an address that you're interested in that's in your price range, and we go out looking for homes, right?
Yep. I always tell them, like, once I give them the pre-approval, I'm like, all right, cool. So at this point, Charles is gonna take the driver's seat. I'm gonna be in the passenger. Actually, I'm gonna be in the back seat. You finna hop in you finna hop in the front seat with Charles. I'm gonna be in the back chilling. And then once Charles get me a contract,
then
I'm gonna take the driver's seat. Charles finna get in the back.
Yeah, we work. Hey, that's how it is. That's our relationship. We work together. We work together. You know, he's driving sometimes, then I take a break, and or he takes a break, then I start driving. So we work together to make it happen for you guys.
Yeah.
You set your budget. You find the home that you want, and you start working once we find that home.
Right. Correct.
Step 2, selecting the agent. Like I said, you're gonna choose me.
Yep.
I'm gonna get you the best deal.
Yep.
I'm gonna get you seller's credit. What else am I gonna do for them?
You gonna make sure you know they.
I'm gonna negotiate the price.
I mean, I think you said it all, bro. At least all the important things.
All the important things I'm gonna do, and all the little things I'll do also.
Yep.
So we skip step 2 because step 2 is finding an agent. Which, if you download my ebook, I would hope that would be me. So we're gonna move on to step 3, which is the pre-approval. So we kind of touched base on this, on what you need to get pre-approved. We need pay stubs, W-2s, or tax returns last 2 years, right?
Correct.
Bank statements, because they want to see that you have the funds for the transaction.
Correct.
And then identification to make sure you are who you say you are.
Absolutely.
Check your credit score, research lenders, apply for pre-approval. Then we kind of touched on this a lot. Wait for pre-approval, receive the pre-approval letter, understand the terms, shop for homes.
Yeah, to put a bow on the pre-approval too, like I even go through this during my loan consultations. So I always tell them, like, there's 3 pillars that we're looking at, right? And we've touched on them already. The 3 pillars, right? My personal favorite, I'll list the first one, is income, right? That's the first pillar. The second pillar is credit, and the third pillar is assets. Those are the 3 pillars we're pretty much going by to essentially come to a final decision on, okay, cool. Based on these 3 pillars, right, this is how much you qualify for.
Ah, okay,
Yeah.
okay, cool. Good stuff. Make an offer when you find a home you like. Work with your real estate agent to make an offer. All right, we'll go over this. Making an offer, because this will be my lane right here. So on step 6, make an offer. Number 1, make an offer. When you find a home you like, you want to work with the real estate agent to make an offer. The way I like to work is that I kind of look at a lot of things. The home that's days on the market, how long it's been sitting on the market, the price range, the area. I run comps to see if it's overpriced or if it's a good deal and underpriced. And then I use a lot of those factors to determine if we can ask for seller credit, what's the chances of us getting seller credit, or just offering something less. Because what I always do is, let's just say my client's budget is $650,000. I kind of always send homes a little bit over to see like what their situation is as far as days on the market. And then if I find a home for, okay, they're qualified for $650K, and I'm sending them homes for $660, between $660 and $670. And let's just say that I've sent them a home that they love, but it costs $670. But this home's been on the market for 100 days. They've done 5 price changes, 5 price drops. What are the chances you think I can get a deal on that to get it at my client's budget where they're qualified for at $650,000?
Oh, your chances are high.
Right?
the odds are in your favor.
Right.
Yeah.
Right. So that's the way I like to work. I like to send homes a little bit above what my clients pre-approved. Now that doesn't mean we have to spend the whole $650K, because you might find something that's $600K and you're very happy with it. We can go with that as well. And remember, you're living in this house, not me. So I want to make sure that you're happy with it.
Of course. Yep.
So we kind of touched base on the determine your offer price. I kind of gave you like how I work, including contingencies. One of my contingencies is getting seller credits. That's like my main one. The other contingency I do like to use is price contingency. So let's just say this house is, you listed it at $650,000, and we're offering you $640, and you accept $640. Now I have a contingency in there to say that it has to appraise at 640, at least.
Gotcha. Okay.
640 or higher.
Gotcha.
I write all my contracts like that. And if it appraises higher, we're good. If it appraises under, that contingency is for the seller to having to lower their price, or we can black out the contract free and clear.
Gotcha. Let's talk about home inspection.
Yeah, let's go ahead. And I was gonna say, let's talk
Yeah.
about home inspection. Go ahead. You take the wheel on this
Yeah.
one. Home inspections, man.
So no, I mean, I have a question for you. You know?
Okay.
So if your client, right, is like, I don't know, let's just say your client's buying a new construction home, or they're buying a home that it's not that old. You know, it looks move-in ready. It looks turnkey. But I guess for this question, let's just say it's a new construction home, right?
Brand new construction.
Brand new construction.
Okay.
And your client doesn't have to get the home inspected, or they don't want to because it's a new construction.
Right.
What is your advice to them? Do you still advise them to get the home inspected? Do you tell them, hey, don't get the home inspected? Like, what's your...
Yeah, I always advise a home inspection. Always. Now, if you don't have to and you don't want to, then that's on you.
Right.
But I advise you to do it. Because even though it's new construction, there's always things that happen. Because like I said, man, they're humans building a house.
Right.
There's things, I've seen nightmares. I've never been through them personally, but I've heard of some nightmare stories. And ironically, the nightmare story that I heard was from somebody not using an agent and going straight to the builder. Guys, do not go straight to the builder. And no shade to the builders, because I love working with new construction builders, but please use an agent, man, because the agent is on your side. The agent is looking out for you in your best interest while you're purchasing this property, your biggest investment that you'll probably make in your whole entire life. The agent is on your side to making sure that everything is done smoothly and you're not kind of like taken advantage of. If you go straight to the builder, their leasing manager they're just doing their job of selling you a new construction home, and that's all they need to do, and that's all they're obligated to do is sell your home. There's something, just keep in mind, and just think of it like this. Whenever we're doing new construction, we're not writing up the offers. We're not writing up the contract. The builders have their own contract. So who do you think the contract is taking care of or protecting?
Right.
The consumer or protecting the builder? Just think about it.
Right.
So that doesn't mean not to go to new construction homes, because I sell a lot of new construction homes, but just go with an agent, please, because we're looking out for you guys. You know?
That's a good point.
Yeah.
Yeah, because that contract it looks way different, you know,
Than ours.
Yeah, exactly.
Because it's theirs and it's protecting them.
Correct.
Which is nothing wrong with it, but like I said, man, the agents over there are working for the builder. They're not out like how we are or how you're able to go work with, different clients and take them to different properties, resale properties, other new construction builders and stuff like that. They work for this builder and they sell this builder's homes, and that's it.
Right.
And that's all their obligation is to.
Right.
So also with home inspections, man, the home inspection comes after we get under contract. So I submit an offer, the listing agent and the owner agrees to the contract and the offer, they sign off. Once I receive it, execute it, signed by all parties, then either you can go ahead and contact a home inspector, or I got a lot of home inspectors. I got one that I love to use. I haven't talked to him in a while, but I would call my home inspector and schedule a home inspection and get them out as quick as possible. So that way we have the most amount of time to review the inspection report during the inspection period, because we like to make our offer very competitive with a very short inspection period. So my inspection periods are usually just 7 days, 1 week. I used to make them 15 days and they would still accept, but like things has changed.
Yeah.
And I noticed since when things started changing and I was always put in the 15-day inspection period, the agent always sent it back and said, hey, we'll accept your offer, but we need it at 7 days inspection period. So I'm like, all right, cool, that's no big deal. But that's when, as soon as I get it back signed, boom, I'm already on the phone. I am actually calling my inspector before, because I know the contract is getting accepted. So I'm already putting my inspector on game. Hey, we're about to get an offer. Here's all the info. Sent it to him in the email. And he's like, let me know when you have it executed, and I'll get out as soon as possible. So usually he'll get out the next day, which gives us 6 days, because we'll get the inspection period back, the inspection report back the same day, the same night, and that'll give us 6 days to go over the inspection period, or go over the inspection report.
Gotcha.
Yep.
What and as far as inspection period goes, like, why, you mentioned 7 days, right? That's like if you go under contract and, you have a 7-day inspection period, like, talk a little bit more about what is that, and like, why is it important, I guess, to make sure you have your eyes locked in on that inspection period?
So the inspection period is for you to do your inspection on the home. And so once we get on the contract, I schedule the inspection. The inspector goes out, and he's looking inside this home and thoroughly, in and out, in between the walls, the attic, the washer, the dryer, the dishwasher, the hot water heater. He's in the attic looking at the truss, looking at the wood, looking at the fascia outside, looking for any water damage, wood rot, any mold, the water pressure. Dude, he's got cracked tiles on the inspection report.
Yeah, everything. Yeah, dumb pictures and
everything, bro. Cracked tiles are in the inspection report. What else? I'm trying to think of like the inspection reports I've looked at. Dude, literally everything is on the inspection report. Everything. And if there's an outlet not working, that's on the inspection report. Literally everything is on the inspection report, and that's why it's important, because it gives you the story behind the home that the naked eye can't see. Right? And then with that, once we get the inspection report back, we go over it, and there's things on there that can cause your insurance to be high, and there's things on there that can cause your insurance to actually be a little lower than someone else's insurance, because it's newer. So, example, the age of the roof, age of the hot water heater, the AC. Yeah.
Gotcha. So, like, if I'm buying a house for the first time, right, and let's just say, right, we get an inspection report, right? Yeah, we get an inspection report, and on that inspection report, there's things on that inspection report, right? Like, all the inspection reports are always going to have things on there, like things that need to be fixed and stuff like that.
Yep.
Now, would you say there's a fine line between, like, okay, we need to talk to the seller and make sure we get a credit for this or get them to fix this, as a, like, I don't know if I'm asking the question the right way.
No, you're right. You are asking the question
yeah.
the right way. So I actually just dealt with that with a deal that got going on right now. So we did the inspection report, and the inspector sent back to us, we couldn't get insurance, or our insurance premium was high because under the guest bathroom toilet tank, the plumbing was corroded. It was corroded, so that was causing the insurance premium to be high, and the seller had to replace that. They had to get a plumber to go out and replace that whole plumbing, and replace the corrosion and all that, and we had to get it re-inspected.
Gotcha.
Which this inspection company was pretty good. They just asked us to send them a picture, and they updated the inspection report, and we were golden. We were able to get insurance binded and move on to the next process.
Nice.
So yeah, there's things on the inspection report that will cause the insurance to not want to pick you up, or cause your premium to be high. And yes, that's going to go back on the seller because, well, it doesn't always have to go back on the seller, but in this particular deal, it went back on the seller because they've been trying to sell their home for a while. And this agent she actually called me today and asked how everything was going, because we're supposed to be closing next week. And yeah, they were just wanting to sell, and I got back to them and I said, hey, this needs to be replaced so we can get our insurance binded. And the agent, she was great to work with too. Got it. She said, okay, I'll get the seller to fix it and send you the invoice and updated pictures. And they got it done in less than a week.
Nice.
Yep. And then that was able to let us start moving again.
Nice.
Yep.
Okay.
Yep.
Yeah, inspections. It's the same thing. There's just so many different avenues when it comes to the home inspection.
Yeah.
So many different things we can talk about.
Yep.
Yeah, I'm happy you mentioned insurance though, because that's a lot of people like a typical first-time home buyer. When they're buying a home, they think of inspection like, hey, let me look at the report, let me make sure there's no deficiencies, in the property and stuff. Which is obviously the whole point of the inspection report. But those deficiencies, they also affect your insurance premium.
Right.
Right, and your insurance premium affects your mortgage payment, right? And your mortgage payment affects your DTI, and your DTI affects your purchasing power,
Right,
so
right.
yeah.
It can be a domino effect.
Yeah, literally. And a lot of people don't like when it comes to insurance, right? A lot of people like they don't really put a lot of thought on insurance.
Yeah.
It's like, okay, as long as the appraisal comes back good, as long as their DTI is good and stuff like that, like they think the file is good. And the insurance is like the last thing they think about sometimes. But little do you know, like this insurance premium can literally like, ruin the deal.
Right. It can knock you out of the ballpark.
Literally.
And you can't buy this house.
Literally. I'm gonna ask you a question too.
Yeah, go ahead.
So I guess we probably both can answer this, but would you say a inspection and a appraisal is the same thing?
No.
Okay.
No. You think it's the same thing?
No. For
Okay.
sure. No.
Yeah. And actually, I was gonna add as soon as we got done with the inspection, I was gonna add appraisal so you can have your point of view.
Got you. I got ahead of myself, bro.
Yeah. Slow down, bro.
I'm trying, bro.
Dude, bro, he's gonna make me drop F-bombs, bro. Chill out, bro. Dude,
Bro, I'm trying, bro.
Hey, look, and also I attend every inspection. I'm there the whole time. I'm there the whole time with the inspector. I'm asking him questions so I can kind of get ahead of the ball game and see what I can pretty much expect on the inspection report. So I'm there doing the inspection report the whole time. 3 hours, I'm there the whole time.
Not all agents can say that, man.
No, not all agents can say that. I'm there. Negotiate repairs, which I kind of went over that.
Yeah.
Request additional inspections? Nope. Oh, actually, here we go. Early on in my career, man, I had a deal, and Alex was involved in this too, because I think I was under the Home Solutions team. I had a listing with my boy Marty. Hey, shout out to my boy Marty. I gotta give you a call. He's
Marty.
a good guy. Yeah, he's my.
You gotta be a good guy if your name is Marty, bro.
My gramps is Marty too.
Oh yeah? Oh yeah,
Yeah.
that's what's up.
Yeah.
Marty.
So, dude, structure engineer. On my first listing, you remember this, the yellow house in Boynton with the pool in the back?
Yeah.
And while I was new to real estate, I had to get a structure engineer out. And I was like, what is that?
Yeah.
Who is that?
Yeah.
Dude, nothing went straight for me early on in my career, bro. And this is how I know a lot of this shit. It's because, dude, I went through a lot.
Trials and error, bro.
Dude, and Alex was there the whole time. He's like, man, think of this as like a free learning lesson that you're getting, because now in the future, whenever anything like this arises, you'll be able to just control it real quick because you've been through it already.
Right.
Yeah, so dude, I had to get a structure engineer. So basically, there was a crack in the middle of the house, and the structure engineer had to come out and kind of pump foam underneath the house to level it back.
Oh wow.
Yeah, that was like,
That's a big issue.
that structure engineer had to come out.
Yeah. Yo, that house about to break into two. Oh my god.
Yeah, I had to get one of those out, and they were expensive. If you have to do anything with the engineer,
It's gonna be an expensive. Yeah.
Yeah, just be ready to write. Just give him a blank check.
Word.
Yeah, give him a blank check because it's gonna be expensive. But yeah, I had to get one of those out on my first listing, dude. That sucked. So go ahead with the appraisal. So after an inspection, there's a few more things that happens in between, and then boom, you'll be calling out an appraisal.
Yeah. Yeah.
What's that like?
So the appraisals on the lender side, we the same way you, reach out and you order the inspection. We essentially do the same thing with the appraisal. So a lot of people do think an appraisal and a home inspection is the same. Like a lot of the times I'll call my client and say, hey, it's time for you to pay for the appraisal, this thing that we've been talking about for a while now. And they'll be like, no, I just did that with the realtor. I'm like, no, that was the inspection. That wasn't no appraisal.
Right.
So it's not the same thing. I do tell people all the time that in appraisal, it is a form of a inspection because they are going out there. The appraisal can come back subject to, so it is a form of an inspection.
Right.
But the most important thing is an appraisal happens essentially just to get an opinion of value on the property. Right. If you're selling your property, let's just say your home is worth $650,000. If you want to sell your house for $3 million, you have the right to do that because it's your house. Right. Will it sell? Probably not.
Right.
But that's what the appraisal is here for. So the lender wants to make sure, like, yo, yes, this house is yours, right? But at the end of the day, I'm giving you the money to buy this house, and you're paying me back through the form of a mortgage.
Right.
So I need to make sure that I'm also protecting my investment.
Right.
I don't want to help you purchase this property and then you're upside down.
Right. It's not worth what I'm giving you.
Exactly. Correct. Yeah.
So an appraisal will go in and kind of like what? They walk into the house and do what?
So an appraisal, they do spend a lot of time on their computers looking at comps, right? You realtors, you guys
Comps
do CMAs.
comps meaning what?
So comps like comparables, right? So
They're comparing what?
they're comparing the subject property, right, which is the property that's under contract, to other properties, within the area that's probably either on the market as active, or maybe other properties that sold within the past 6 months to a year. So that's essentially what they're doing.
So other properties that are like similar, right?
Other properties that are similar, correct? Yeah.
Okay.
They're looking at the home. They're making sure, of course, there's no major problems, with the home. If an appraiser is at a property and there's a hole in the roof, that's a problem. They'll say like, yo, the roof is, this is the value of the property, but before we clear everything up, like, this issue needs to get fixed.
Right.
So it is a form of an inspection, but the main thing is it's basically a opinion of value, right?
So
And
they're going out there to tell you what they think the house is worth.
exactly correct. Yep.
And their opinion is very crucial. It matters.
It matters a lot. Their opinion affects the market.
Their opinion affects the market.
Yeah. Correct.
So, so they're gonna be checking out your home, maybe looking at upgrades that might have done.
Right.
Making sure the house is in good standing, is that form of inspection.
Correct.
Making sure everything is working, like there's no major damage that they can see with their naked eye.
Correct. Yep.
And then from there they kind of give their opinion of value compared to the other homes that are similar in the area.
Correct. Yep.
Cool.
Yep.
Now,
and then you along the lines of appraisals, right? Realtors, you guys essentially do the same thing when you guys have listings, right? You guys aren't licensed appraisals, but you guys are playing the role of an appraisal through CMAs, right?
Right. So we can give out it's called a BPO, a broker price opinion. So we essentially do the same thing, but it's just an opinion on our end. And the appraiser does the same thing, but theirs is the one that counts.
Correct, right.
Ours is just an opinion to kind of get an idea where we can like list your home and how much we can list it for.
Right.
Yeah.
How important is listing a property at the right price? How important is that?
Oh, dude, it's very important because if you list the house overpriced, it's just gonna sit on the market. Your seller is not gonna be happy. It's gonna sit on the market for days. People are gonna come look and not even make an offer.
Yep.
Even if they want that house and they can afford it, but because it's overpriced, they're not even gonna make an offer.
Right.
So you wanna list your house, I would say sometimes below market value, and that'll create some type of like war.
Right.
And then you'll end up getting what you actually listed it for.
Correct.
That was considered overpriced. Yeah, so there's like tactics that agents use to try to get the seller the best and the most amount of money. But at the same time, if the seller's not listing and they want their house to be listed at a certain price, which we would think is overpriced, then they're gonna be shooting themselves in the foot because they're not gonna get any offers and the house is gonna sit on the market.
Right.
Versus the psychological way of doing it and getting buyers and people routed up is listing it under market value. And when you see it, you're gonna be like, holy shit, this house is worth X amount of dollars and they only got listed for this much. Let's put an offer on it. Yeah, you're gonna put, you and a million other people are gonna think the same thing.
Yep.
And the agent's gonna say, hey, we just got an offer, make sure it's your highest and best. We have 10 more offers that we gotta go over.
Yep.
At that point, you're gonna actually give an offer that you're gonna give an offer that you think is actually worth for that house.
Right.
For you.
Right.
Because everybody's price is different on what you think something's worth.
Right. Correct.
Right?
Correct.
And even everything's only worth what it's worth to you.
Exactly. Yep.
Step 8, which is closing date. Dude, what happens on closing date?
Hey man, closing day. That's the
Parlay. Get the champagne bottles in.
Hey man, closing day. That's what we got in this to be. That's the whole reason why we're doing all of this, you know.
To get to the closing day.
To get to the closing day, you know.
Yo, it's been 30 days, 45 days,
Yup.
working with you, like literally talking to you late nights, early mornings, all day, texting, emailing, to finally get to the closing
day.
Dude, what happens on closing day? What do we do?
So closing day, you know, of course, you're signing a bunch of documents, you know.
Where are we going? Where are we going?
Closing day. We could be going a lot of places, especially nowadays. But traditionally, right? We're going to the title company's office.
We're gonna go to the title company who handles all the monies and funds. They're gonna tell you where every penny has gone. So your money's not just getting spent in buying this home. Like every dollar, every penny is allocated to something. So we'll go to the title company and they're gonna give us a breakdown of where all those funds went, how much money you need to give us to get your keys to your new house, how much money the seller's getting, how much money the title company's getting paid, how much the realtors are getting paid, how much the lenders get paid. I actually do this job for free because you guys can hire me for free. Yeah, guys, when you get to the closing table, you can count pockets.
Yeah. Hey, look, real estate, I tell people all the time, man, real estate is black and white.
Black and white, man.
Black and white, man.
No races.
No races. Black and white, man. Black and white.
Yeah, so
there's no hiding nothing, man.
Hey, so if you want to count pockets, come work with me. Let's get to the closing table and you can count my pockets.
Yeah.
How about that, right? We call it that. So we get to the title company. We have the title agent that'll bring how big is? Show them how big the stack of papers is.
Man, that stack of paper probably the size of this bull over here. I'd say from the table to the horns of the bull.
Don't scare him. Don't scare him. It's probably this thick.
I'd say so.
It's about this thick of paper. But this is paper.
But there's a lot of signage.
There's a lot of signage. That's thick, man. Just paper, that's thick. So you'll get to the title company. You'll probably be doing, an hour worth of signing and going. And it only takes an hour because the most title agents that I've dealt with, man, they're pretty good and they like what they're doing.
Right.
And if my buyer has any questions, all they got to do is ask. And I've sat there with some of my buyers, and they've asked a question on every sheet of paper, which is cool. This is their first time doing this. They want to know what's going on.
Right.
And it's probably taking like 2 hours for us to get through the whole signing.
Right.
But dude, literally, like we get paid handsomely, so I'll sit there for 6 hours.
Yeah, absolutely.
You know?
It's a celebration, and at the same time,
huge celebration.
Huge celebration,
Yeah.
and you want to make sure your client is well informed, right? Because like you alluded to earlier, right? You're not the one living in the house. You're not the one making the payments.
Right.
Right. Once you sign those documents, they take that closing package, they ship it off to the lender, or whatever they do, the title company does with it. Like, hey, at that point, everything on you. Of course, you always have us. You can always call us, and we'll answer questions and things like that. We don't just help you and disappear.
Right.
You know, we help you one time. We're a family for life. Right.
Hell yeah.
So But yeah, it's important to ask questions. You know, if you don't understand something, it's good to speak up.
Right.
You know, so but yeah, ultimately it's a celebration.
So it's a huge celebration. It's a huge celebration. So
Yeah.
get to the closing table, man. You sign your paperwork. You sign in the new deed, the promissory note. What else? You're signing a lot of stuff that essentially transfers everything associated with this property over to you, and now you become the new owner.
Yep.
And the number one thing, I want to say this right now, after you close on your home, make sure to go get your the homestead exemption. It's a huge tax break for you living in your primary residence.
Yep.
If you don't do that, your taxes will be through the roof.
Yep. Yep.
Yeah.
Yeah, and homes. A lot of people, like when it comes to homestead, you know, it does give you a solid tax break on your property taxes, and at the same time, it protects you too. You know, that's your homestead. You know,
Yeah.
I feel like a lot of people, you know, forget about that, but when your home is homesteaded, it actually protects you, and it doesn't. And on top of that, it stops your taxes from going up, you know, like too high.
Yeah.
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 So you get savings, and on top of that, your taxes can increase, you know, like dramatically.
Right.
Yeah. So
This is awesome, man.
let me backtrack a little bit. I feel like there's something important to say here.
Yeah, go ahead.
So before we get to the closing table, right? We get a clear to close.
We got to get it clear to close.
We got to get the clear to close, right?
Right.
So during the clear to close, right? It's like, okay, cool. You know, I went through the loan approval process. We're excited. You know, we got the clear to close. You know, that means, you know, our loan got approved, and the next step is closing.
Right.
So during that stage, there's a lot of emotion going on, right? People
Yeah.
get excited.
Yeah.
Oh, I'm finding a homeowner. You're not a homeowner yet. You gotta, you gotta go.
sign.
You gotta sign first. So, due to all that emotion going on, right? Sometimes people are like, you know what, like, okay, let me go get this furniture. Let me go buy a new car.
Yeah, wait, because that can literally ruin the whole deal.
You could go from 100 to 0 like this.
Oh my God. I've heard that happen. It's never happened with me personally because I'm always educating my clients, like,
Yeah.
do not do nothing yet.
Yeah, for sure.
So you're saying sign the paperwork at the title company before you go buying new furniture on credit,
Correct.
buying a new car, and things like that.
Yep. Before you do anything to your finances, your income, right? Don't say like, oh, you know, I finally got the clear to close. Let me go and cut back on some hours. Or you know what? I've been putting up with these people at this job for this house. I'm done. I'm done.
Don't do it. Don't do it.
Don't quit your job.
Don't do nothing crazy,
Don't
man.
do nothing crazy that's going to affect your finances.
Right.
As on a credit level, on an income level.
Yeah.
And even your savings, like, you still got to wire the funds, you know,
Right.
over to the title company.
Right.
You know, or the attorney. So you definitely want to make sure you don't do anything like that, because a clear to close doesn't mean that the loan's closed and it's funded.
You're
right?
done, yeah, no.
It doesn't mean that, you know, it's still a live file.
Right.
You know, so there's a lot of things that
A
happen.
live grenade.
A live grenade, yeah. For sure. A ticking time bomb if you do the wrong things.
Facts.
So that's a notable mention.
Hey, that's huge, bro. I like that.
Yeah.
Hey, thank you for saying that, because I would have kind of like that would have went over my head or not, or I would have skipped over that. Yeah, that's huge. The clear to close doesn't mean you're done. The clear to close means that you can go to the title company, sign your paperwork, send over the rest of the funds, and then you have the house.
Exactly.
You wire the rest of the funds, you sign the rest of the paperwork, and then you're good.
Yeah.
But do not go buy furniture. Do not go buy a new car. Do not quit your job. Do not start spending before any of that.
Yep.
All right.
Yep.
That's a good one.
It's still a life file.
Yeah.
Yep.
That's huge.
Yeah, I had a you could go to the next one while I share the story. I had a friend, he got a clear to close, man. You know, they I forgot how long they were under contract. I can't remember that. I didn't get the chance to do the loan, unfortunately, because the client, she had a lender already, and they got the clear to close and everything like that. And the client, she, you know, or his client, she goes out and she starts buying furniture. Right, furniture. So the lender is cool. The lender approved her and everything like that, but she was buying a home within a association. And I guess the association didn't get to the point where they did the background and the credit check. So due to the fact that she was, getting all that hard inquiry and she was, swiping,
Right.
her score dropped.
Oh.
So with the lender, she was fine.
Right.
She still got the clear to close and everything. She was good to go.
Right.
But with the association, they had a certain credit requirement, and her score went beneath that, and then that literally blew the entire deal apart.
Oh my God.
Yeah.
Did she end up finding a home somewhere else, or?
I believe she did. Yeah,
Yeah.
I believe she did. Yeah. Big lesson learned for her.
Oh yeah. You'll learn a lot during the whole process of buying a home and
Yep.
what not to do and stuff like that.
Yep.
We didn't talk about interest rates, man. Like when do you
Ooh,
as
good
a
topic.
as a mortgage guy, right? When do you lock in the interest rate?
That's a great question. So usually the interest rate, like upon us getting like a executed contract, that's when we'll lock in the interest rate.
You lock it in?
That's when I'll lock it. Yeah. If I know, like for example, let's just say you're out, you're showing your client's property. If we get like a verbal acceptance, right? I'll even if the rates are good at that point, or it looks like it looks favorable, we'll go ahead and we'll pretty much lock the interest rate right then and there. But
Okay.
usually once we get the or my team and I, the way we do it, once we get the executed contract, that's when we'll lock in the interest rate.
Okay.
Yeah, because interest rates have expiration dates, right?
Right.
So there's like, the expiration date can go anywhere from, 7 days all the way up to 30 days.
Okay.
Right? So the longer the expiration date, the more funds it's going to cost the consumer.
Gotcha.
Right? So sometimes people ask me like, hey, I plan on buying a house like in a month, or I'll probably go into contract in 2 months. Rates look really good right now. They're probably going to go up. Can you lock in my interest rate right now? Well, yeah, we probably could do that, but it just doesn't make sense to do that.
Got you.
Yeah.
Let me ask you this. Let's say you get an executed contract and you said you lock the rate as soon as you get the executed contract, right? Let's say rates drop below where you have me locked. Can we get that lower rate?
So with that particular lender, because once again, we're mortgage brokers. So with that particular lender that we locked the interest rate with, we would essentially just have to, I guess, start over again, withdraw the file, and then pretty much resubmit it. But what we would usually do, if it's like something significant, right?
That would be the only reason why you would
Exactly, correct. Yeah.
Yeah.
If it's something significant, then usually we'll probably just, go to another lender.
do it. Okay.
Yeah.
Okay.
Just submit the file to another lender. That's the power of being a mortgage broker.
Yeah, you can work with different.
Exactly, different
Yeah.
lenders, correct.
Yeah, that's awesome. Hey, receive the keys. That's the last thing, man.
Hey, that's what we're waiting for.
That's it. So we just went through my whole ebook. Guys, this is free. You can download it on my click the link on my Instagram, SFLA Luxury Homes, and go to my Stan store, and it's the first time home buyer's guide. It's free. Just download it and you'll get it straight to your email. And then you can kind of read it and go over it. But hey man, we just got locked in another one, man.
Yup.
I appreciate you, bro.
Yes, sir.
Yeah, man, that was
Thanks for
good.
having me.
Listen, guys, if you're looking for a mortgage broker, my boy Joe, I'll put his information down in the description. If you're looking for a realtor, I help people buy and sell homes and rent if you must rent. But believe, once I help you get that rental, I'm gonna be calling you to set up a game plan to buy a home,
Right.
because that's my job.
Correct.
I'd be doing you a disservice if I didn't.
Right.
So make sure you like, comment, subscribe. If you're on IG, hit that follow button, and we'll see y'all on the next one, man. I appreciate everybody. Peace.
Cut! Nah, that was dope.
Yeah, that was good, man. I like that.
That was dope. Yup.
It's obviously 11 o'clock. Oh! So
no.
it's 11 o'clock at night, man. During normal business hours, we have 2 receptionists sit here. So you would come up and you'll get first class concierge service. You come up here, you ask for Charles or Joe with home solutions teams or loan solutions team.
Yep.
And they'll call us to the front, or they'll literally walk you back there, or walk and come get us. Or if you let us know, we'll be coming around the corner to greet you and then bring you back either to our office or one of these conference rooms, one of many conference rooms that we have. But yeah, we're here in Boynton Beach, Gateway and Congress in the Renaissance Development.
Heart of Boynton.
The heart of Boynton.
Yeah.
Yeah, so, boom, that's it. Because she's hungry, you want chicken nuggets? You want chicken nuggets? Tell the camera you want chicken nuggets. Tell them you want chicken nuggets. Then I'm not getting you chicken nuggets. Then I'm not getting it then. All right, tell the mic right there, I want chicken nuggets.
I want chicken nuggets.